Welcome to the Santu Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for February 26, 2017. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.57, down from 1.78 last week, continues within bullish territory. The total count of securities in bullish or bearish patterns decreased fractionally to 3,199. The count of bearish stocks increased 8%, while the count of stocks in bullish patterns decreased 5%. The Santu Pirls PNF Market Breadth Summary Chart shows us a market now 15 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Santu Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the NASDAQ McClellan Summation Index, rose 29 points for the ninth advance in 15 weeks. At a positive 354.19 points, it continues above the November 2014 top and the March 2015 top, but continues below the December 2016, April 2016, May 2016, and August 2016 tops above plus 100, as well as continuing above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the NASDAQ Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the NASDAQ had 3 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the NASDAQ ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at a positive 84.3, down from a positive 149.62 last week. We wait for the CCI 20 daily to return to the plus or minus 50 range for a new trade. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the NASDAQ Composite Index began a Woody's uptrend 43 weeks ago, while the daily CCI 20 began a Woody's uptrend 14 weeks ago. The CCI 20 weekly has fallen to a positive 158.17 from a positive 172.97 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another potential trade. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary, some tech and banking on top, gold and silver, oil, and oil services on the bottom. Bullish, KBW Bank continues in the top 5. Gold and silver continues in the bottom 5. Oil and oil services continue in the bottom 5. Bearish, S&P Retail, and computer hardware have left the top 5. Focus this week from www.realinvestmentadvice.com. Visualizing 10 Reasons for Caution, February 24th, 2017. We advise reviewing the article and all 10 charts, but the message in a nutshell is the following. Record levels of anything are records for a reason. It is where the point where previous limits were reached. Therefore, when a record level is reached, it is not the beginning, but rather an indication of the maturity of a cycle. While the media has focused on employment, record stock market levels, etc., as a sign of an ongoing economic recovery, history suggests caution. Thank you for viewing this week's Sand to Pearls Stock Market Commentary, featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, looking forward to spring, no doubt, that you are looking forward to a prosperous and productive week coming up, and wishing you, as always, true success.